Welcome to the Real Estate Mentor Podcast, the number one real estate mentorship podcast on the internet. Today, I am your host, Jonathan Klunk. I encourage you to follow us wherever you get your podcasts so that you never miss an episode. And if you're a YouTuber, go there and subscribe to our channel, where you can also hear these podcast recordings in full. And today, we are very excited to have Mr. William Parmer here with us. I'm going to tell you a little bit about him before I introduce him. He is a dynamic real estate investor, coach for Master Passive Income, and co-host of the Breakthrough Investor Podcast. His journey from U.S. Marine to law enforcement officer and ultimately to successful real estate entrepreneur is inspiring. His expertise in creating passive income through strategic investments, coupled with his experience in acquiring diverse properties like mobile home parks and short-term rentals, my favorite, makes him a valuable resource for inspiring investors. So without further ado, let's dive into this great conversation that we are going to have today and learn from his wealth of experience. William, do you go by William or Bill?
William. Bill's my dad.
Got it. Mr. Parmer Sr.
Yeah.
Thank you so much for coming on the show today, and thank you for your service.
My pleasure. Very excited to be here. Thanks for having me on.
Absolutely. So you have worn many hats in your career: Marine, police officer, painter, and now a real estate investor. Give us a little insight into your background and how all of these experiences have shaped your approach to real estate.
Oh, man, that could be a whole podcast episode in and of itself. But so I'm from a large family. I'm one of seven. So I'm the third oldest, so oldest boy, though. I have three sisters and three brothers, making sure I'm not messing that up. But yeah, so my journey kind of started after I got out of the military, and came back home after a couple of years of active service, then did some reserve time. Right after I got out, I got married and couldn't stand to go house painting, which is what I used to do, is what my family business is. So I went into law enforcement because it was an easier transition for me mentally, and I felt like I was actually doing something important as opposed to painting somebody's house. And so I did that.
Aesthetics are important.
Oh, aesthetics are very, very important. I agree. And so I did that. And then during that time, I was a law enforcement officer locally in Southwest Virginia. And it was during COVID. So I wasn't really allowed to do my job, wasn't really allowed to do what I had just been through months of training to do. And so I was told I had to basically sit in my car. It was night shift. So basically 12 hours of sitting there, and I realized I was listening to music for 12 hours and not really learning much. So I, on a fluke, went to Spotify and just typed in real estate podcast. My dad had owned one or two rentals when I was a kid, but didn't do it very efficiently or effectively. And I was like, well, I always thought that was interesting, but never really thought about it as this can actually generate money and actually make income enough for me to not have to work full time if I choose. So went on there and I found my coach and mentor, Dustin Heiner's podcast, Master Passive Income. And once I started listening to that, I binged. It had to be close to 200 episodes. And I realized I qualified to be a student, and I told my wife, I said, I want to do this thing, but we got to kind of be all in. So that's what we did. And it's kind of grown from there.
So you were inspired by the rentals that your dad had, or was there something else that kind of put you on the path towards real estate investing?
Well, I kind of looked at, I didn't really view it as a way to like generate extra income and anything like that. I didn't really understand the numbers when I first started out. So I didn't understand that you could actually make really good money and potentially like live entirely off of that income at the time. Now I realize it, and like I should have done this years and years and years ago, but partly it was watching my dad do it wrong. I wanted to have more time with them. Kids, I have three. And so I wanted more time with them. And I was like, well, how do I get more time? Well, I needed more time by having something that produces income. And so once I started listening to the podcast, it was like, oh, wow, this actually could produce income. And so that's kind of what started the whole journey.
So you found this podcast sitting in your squad car waiting for some action that didn't seem to happen at the time.
No, not much.
And so this was during COVID, so not too many years ago. So I think relatively speaking, your newer to real estate investing than some of the people that we have on here who've been, doing it for decades.
Yeah.
Tell us what has led to this, massive growth of your portfolio in such a small period of time. What are some of those tools or techniques that you learned quickly and started applying, whether it's, getting the financing or partnerships or identifying high income producing properties, whether in your local area or maybe outside of the state? What was your kind of initial strategy that helped you get traction quickly?
Well, I would say really being in the right rooms with the right people. Networking is kind of one of my strong points. I really enjoy people, and I really like being able to help people. So if there's a need that somebody has that I can fill, I really like to try to meet that need. Mm-hmm. And it doesn't always have to be a business deal either. It could be just simple, practical. But I'd say that's probably one of my biggest things that's been really, really beneficial for me, is that I really enjoy networking. And then private money. So I used my networking and reached out to some friends to actually find private money. That's one of the things that we teach at Master Passive Income, is how to find private money and then how you cultivate that relationship. So that way people like you, know you, and trust you. Those are like the big three things, in my opinion, for whether or not you're going to have people that want to lend to you. So I reached out with that.
Trust factor.
Yeah, exactly. So I just use that to grow my base some and just use my private lender for local properties. I started out actually in Ohio. And again, I'm in Virginia. So I started out of state, and my first property was actually out of state. That was a totally different avenue once I realized I could buy anywhere in the world, but primarily the U.S., and actually make income.
Did you buy that property sight unseen?
I did. The only reason I know that I own it, besides the fact that I get money, is that the color on the outside of the house changed from when I first looked at Google Maps. So I go to Street View if I want to see it. I had never actually been to Ohio at the moment that I bought it, and I ended up going there last year, and I was about 30 minutes away from the house, and I actually thought about driving by it to go see it, and I was like, it's literally not worth my time to do it.
I hear you on that one. We bought our house, which is an Airbnb for us, but we visit several times a year in the mountains of Boone, North Carolina.
Oh, yeah. Great
sight
area.
Unseen. Yes.
Great area.
I remember after closing, we went and saw it for the first time, and my first reaction was, this is actually bigger than it looked in the pictures.
Wow, that's
which
remarkable.
Nobody ever says.
Yeah, that doesn't happen. No, Boone's a beautiful area. My parents go there all the time.
Oh, yeah, I love it. Oh, really?
Yeah.
Boone.
Yeah,
I'll send you a link.
Oh, hey, that'd be all about it. I'll send them down there. No, Virginia Tech College, Southwest?
Not personally.
Gotcha. Well,
I've heard of it. I know where it is.
About 2 hours from Boone. So not too far.
Okay. Yeah, not at all. It'd be a nice weekend getaway.
Yeah, absolutely.
So let's talk about private money for a second. Are you involved in any type of partnerships that you've put together? Or when you say private money, do you mean that you just go to like a hard money lender and get a 12 to 14 month loan, bridge loan or something like that?
So I don't have any partnerships. I haven't done any deals where it's like I really want a partnership or have done that. I would be interested in that idea. But my private money is just an individual that I have met by reaching out to some good close friends, and they, ironically, I didn't even know, but this guy knew of my family, so we have I hope it's a good reputation in the area, but so he knew of my family and agreed to meet with me. Of course, I didn't know who this was, and I tell all my students this: if you find a property, or not a property, a private money lender, you protect their identity. Like, you don't pass that information out, because you don't want somebody to be beating down their doors trying to get them to lend money and so on and so forth.
Yeah. It takes time to build your Rolodex.
Absolutely.
Protect it.
So this friend reached out on my behalf, and this gentleman agreed to meet with me, and we went and had coffee. And at this point, I had purchased one house. So at the end of it, he said, well, do you want to check now or do you want to check later? And so I said, check later. Property first, check later. And so that relationship has been very instrumental for building my portfolio. And not only that, he's a great wealth of knowledge, because he's been doing this for a while, and he was in the banking industry for many years. So he really understands what banks want, and then how to be creative with financing. So I learn a lot from just borrowing from him.
Yeah, those are always the best. You get the money and you get the education at the same time.
Oh, absolutely. Yeah, I'm all about education, free and paid.
I love creative deals. I've done a lot of those in my life, more on the commercial side with my clients than on residential. Residential transactions, if I'm representing a buyer or seller, and investment or not, lower priced properties are usually pretty straightforward, cut and dry. Different nuances to each, but from a financing standpoint, it's the seller's paid cash at closing, whether it be from a lender or a cash transaction. What are some of the creative elements of these deals that you've put together, or things that you've learned from this anonymous individual who we will not reveal?
Well, let's see. He actually helped me purchase my small mobile home park. Was actually the first deal we did together. So I basically went to him with the numbers, like the quick numbers of what I thought it could generate cash flow wise, because it was severely under rented and very poorly managed. The previous owner bought it to do something else with it, but he did not do his homework on the area. And he moved here and then wanted to just demolish the whole park and build fishing cabins. Great idea in theory, but this is like Southwest Virginia. It's like, you cannot do that kind of stuff, especially because this was a really small town. So the town absolutely said no way.
Okay. Zoning.
Well, they would have allowed it zoning wise, but you would have displaced some tenants that have been there for 40 years. And they were like, you're not going to just displace them. And they were on fixed incomes and things like that. So it was not a good situation. And so he had purchased it for $200 and he was selling it 2.5 years later, 3 years later for $175. So he's already taken a $25,000 loss. And he didn't have any management in place, no leases, no anything. And he had to go knock on their doors on Saturday afternoon and once a month to collect rent. Just terrible.
Not passive.
No,
not passive at all.
Not at all. And he had somebody squatting and he had an abandoned trailer, an abandoned car, and some other things going on. But I looked at it and was like, well, I see a lot of potential. Now, keep in mind, I had never done one of these before. And
second deal.
Yeah, absolutely. It was, looking back at it, I purchased it. I gave him his asking price at $175. I brought $22,500 to the table. I paid too much because it was only bringing in $950 gross when I purchased.
From how many? How many units?
It's a 10 pad. So that one at the time had five units and an old duplex. So duplex roof needed to be redone. One side needed to be remodeled. He had somebody using drugs in one side or in one of the single wides, and she wasn't paying. And just it was a fiasco. And I look back now and I'm like, I can't believe my private money lender actually sat with me and worked out how to purchase this thing with me. I don't know what he was doing, because now I look at that and go, yeah, no.
He saw the potential like you did, I guess.
I guess so. But fortunately for me, it's in a really small area and this town is growing. It doesn't even have a stoplight, if that tells you how small it is. But it has a lot of thoroughfare traffic that goes through it. And this piece of property itself is unique because it is smack in the middle of the town and the town is growing. So when it grows big enough, the town is going to want to purchase that piece of property from me because it's 1.5 acres roughly. So it's large enough to be substantial. And worst case, it makes cash flow it's making now for the next, 10, 15 years, and I'll sell it or whenever, if I get a good offer, or if the town starts growing, I'll hold on to it, and it could be $1 million property depending.
So obviously you've turned things around there a little bit. What have you raised the gross rents up to from $950? Yeah,
so there was a lot of factors that went into that, and I've learned a lot about mobile home parks subsequently. I don't know that I made a lot of mistakes except for how I bought it. I paid too much, but that was probably the biggest mistake. Right now, rents they vary a little bit. And that's one thing you have to understand about mobile home parks. It's not super yes, it should be set, but you have somebody that's late or only pays half or something like that. It's pretty normal. It doesn't really bother me anymore. It used to really bother me for the first 8 months that I owned it. And then I realized this is just how they go. Right now we're at about $3,300 gross currently, and there is some room for improvement, but I have to spend a little bit more money than I want to spend for this improvement. So I am kind of waiting for the opportune time or deal to move forward on that.
Yeah, and thank you for sharing that. I think a lot of times in real estate, we talk about the potential and what you can do. And we don't spend a lot of time talking about the mistakes that we've made on, individual deal by deal basis. I think it's respectable, especially going in and trying to learn crash course on a topic you don't know about.
Absolutely.
I don't know a lot about mobile home parks. I had an episode a little while back. So, you guys listening, if you are interested in learning more about mobile home parks, or parking lots. That's what my guest and I were talking about on that episode. And we really did like an hour deep dive into both of those. And I mean, the economics are truly fascinating, especially if you can, find a good one. And so sounds like, you admitted that it was more in the purchase that your mistakes were made. So if you had purchased this for a lower price, then you feel it would have been a much better investment for you.
Absolutely. Looking at it now, I should have looked at the numbers more as a house instead of what it potentially could have brought in, because the one thing I think people don't do enough with a commercial property, because this is most certainly a commercial property. I had to get a commercial loan for it. I was willing to give him $175, but if I was looking at it as a commercial property, it was only bringing in $950 gross. So my offer should have been like $80,000, but it should have been somewhere around there at the very most. Mm-hmm. So I didn't do so hot in that arena, but I was savvy enough and willing to put in hours and to get it up to where it's at now. Somebody tracked me down from somewhere and actually went to make me an offer on it, but they just decided that it was a little bit too small for them, I guess, at the time. So they didn't, but I don't know. We'll see what happens with that one. So far, I'm really enjoying owning it. It's not been a terrible hassle, especially because I don't manage myself. So I refuse to do that. It's not worth my time. So I pay a property manager to do that.
I know what you mean. I got to go serve a 7-day notice, write it up right after we're finished with this podcast.
Brutal.
Here. So yeah. Being a landlord is not always glamorous if, especially if you are doing your own property management, which I prefer. So that's a balance that I have to find too, because I feel nobody's going to do it as good as you are, especially with the repairs and the tenant relations. And, I can probably keep a tenant longer than a property management company can and work with them better. So, you don't have as much turnover and then wear and tear and damage on the property. So that's a decision that I've made. But I know that the time is coming where I have to part with that if I plan to continue scaling my real estate business, my investment business, because it always just takes up time and space, in the back of your mind with all the things you have to think about. It's
that time versus money. Like what is more worth your time? I think when you get to a certain point in real estate scaling wise, where like, well, I can keep managing all of this and make probably another 20% per year on top of what I was making, or I can be free of this headache by vetting and hiring a property manager, or even if your portfolio is large enough. I know guys that have in-house property managers and their time is now free. They can look at purchasing more assets. They can pursue other avenues of interest, hobbies, things of that nature. So it's definitely something to take into account for sure.
In-house is definitely, I think, the preferred way about going about that. Once you get to that point where you can sustain that and it makes sense to do it, having an employee that you oversee versus a third-party property management company, probably with a lot of doors, and questionable maintenance and things of that nature, would certainly put my mind at ease.
Absolutely, yeah.
So how many deals total have you done? You had your first property, then you met your hard money lender and got you into the mobile home park. And what has the journey been like since then for you?
Well, it's been interesting. So the last year has been pretty slow, actually, for me. But I think to answer your first question, the number of deals I got to think about this. Believe it or not, it's pretty minimal. It's only about 5. But the properties I was able to purchase and do it in the right way where they just make money. They just cash flow. So that's been really, really great because it just shows that if you buy it the right way, what's that old saying? You make your money in real estate when you purchase and then you realize the money when you sell. I also use refinance because you can pull that cash out again and again.
The deals are made at the purchase, yes.
Yeah. and which I did not do at the mobile home park, but I did do with other ones. So, but that's been really good. And I recently got into a flip that I'm actually doing myself. I'm fairly handy myself. So 6 months ago, I'm not full-time real estate. I'll just put that out there. So everybody thinks that like I have like 50,000 rentals or something crazy. And it's really not the case. But I ended up starting 6 months ago my own handyman company just because I wanted to choose what I did and did not do on the daily. And that's been a really great journey so far. It's been really interesting. I've learned a lot, but I don't live off of my real estate income. So I've refused to touch it. It just stays in the business and keeps building to buy the next property. So I continue to live doing a job just so that way I can continue to build that real estate and not live off of it.
So tell us about how you find your deals, how you qualify them. Because, I think mobile home park probably a bit of a lesson, went back, retooled, got additional knowledge, revised your strategy a little bit. So walk me through that process. If you have somebody out there kind of sourcing some deals for you, they send something over. What's the first thing that you're looking at? Does it have to pass, the 1% rule before you'll take a look at it and then you're going to do a deep dive?
So,
okay.
I say off the bat, but that's not entirely true. I will look at things that do not meet the 1% rule, but what I'm looking, well, for starters, let me go back to how I kind of evaluate. So I was talking to a fellow that I've never met. He lives down in Florida. He owns 5 or 7 mobile home parks. And what he told me I thought was really, really smart. If the way that I look at the mobile home parks now is if it's 20 pads and less, meaning 20 mobile homes and less, I want to own the mobile homes and the land. I want to own it all. But he said 20 pads and more, he wants to own just the dirt. He doesn't want to deal with any maintenance. And he said the reason being is because the amount of time that you'll spend doing maintenance on anything that's 20 units and above is really, really high. It's like, yes, you'll make a ton more money, but you're losing a lot of time. And anything below that, he's like, you can afford to probably spend $15,000, $16,000 on a single wide each year if you wanted to. So he's like, when you look at that metric, that's for those 20 and below. He said, when you think about it that way, it kind of changes. Well, you set back your capital expenditures, things like that. And then there you go. So I kind of use that as kind of a rule of thumb, like how big is the park? Where's it located? I also want to know how close is it to a Walmart? It sounds like very like, why would you want to know that? But if you think about it, it's where a lot of people shop around here, or in most areas where mobile home parks are situated. And I think it was, I can't remember who it was. I was listening to a podcast. It might have been Frank Rolfe. He has a podcast called Mobile Home Park Mastery, and he's him and a partner are the 5th largest mobile home park owners in the U.S. Very interesting. I pick up tidbits from him listening to his stuff. So I look at that, and then I look at what it currently brings in rent-wise, and then I call around to other mobile home parks and ask them, hey, what are your pads rent for? And a lot of people will just give you that information. Like, what's your lot rent? Your tenants pay utilities? Are you on septic? Are you on sewers or city sewer? Who pays the water? Who pays the electric? All those things kind of factor into what I'd be willing to pay. But the biggest one is how many pads are privately owned by the tenants? And then how many would I end up with? What shape are they in? And then what should the market rent actually be? Because a lot of them are mom and pop run, like the older ones, and they haven't changed the rent in 10 years. Yeah. And they may be paid off, which is great if they are. If they are, then my first thought is do owner finance. Like remove them from the picture, raise the rents, increase it more. And then at 5 years or so, if they're good with keeping it under owner finance, just keep it with them as long as you can if everything works well. If not, we'll just put in the contract that you could pay them off any time at the agreed upon price. And to make it sweeter for them, you could always consider an interest only offer. That's been beneficial on at least one occasion for me. That's the start of what I look at as far as whether or not I'm going to consider it. There's a lot of nuance about certain mobile home parks in certain areas. You have to call around and find out what the town will allow, how's it zoned, things of that nature, because there's a nuance on mine where if I want to put a new mobile home park in there, I have to remove 2 of the old ones to do so.
Okay.
Not super advantageous rent wise. It would make the park look prettier and I could get some good rent out of that, but I'm removing a single wide that if I took 15, 20 grand, 20 grand being very high end, to redo, that 20 grand will make me 750 a month pretty easily, maybe more right now. So it's a case of, do you want to do that or not?
Yeah, and I think that, all of that makes sense. And if you can find mom and pop where it's paid off and they see the value of having that consistent money coming in on a monthly basis, especially for tax purposes versus a lump sum, and you can get them up to 5 years, that's excellent. Because, I think a lot of people who entertain sellers, the owner financing component of that, they're looking at a max of 12 to 24 months, maybe 36 if you're lucky. Definitely interest only. So that's all free money to them because they're still getting their principal at the end of the year. And, it blows my mind. You mentioned some of these people haven't raised rents in, maybe 10 years. I mean, at a minimum, you have to be keeping up with inflation.
They don't,
which a couple of years ago, that'd be 4%.
Yeah.
4%.
Well, they're losing money hand over fist, and they still have the same management problems. But there's an interesting line. I was talking with another real estate investor, and he said that he was pointing out there's an interesting line where if you're so cheap, you're going to get the wrong type of clientele. And it's the same for mobile home parks. Doesn't matter that it's the cheapest way to live in the U.S., like housing-wise. But if your rent is so low, you're actually inviting the wrong type of clientele. So you have to find that happy medium. You don't want to be so expensive that you're like waiting for that perfect tenant, but you need to find that happy medium where you're still raising the rents, you're still market competitive, but you got less turnover. You don't have people leaving all the time. So each park is really interesting. And the reason why I said I won't go away from parks that are not meeting the 1% rule is because if they own the mobile homes, the park does, if the park has owned most of the mobile homes and they're too old and I don't want to put the money in them, I do an owner finance option for 7 years at 15, 16%. And people will pay that all day long because then they own it. You give them a pride of ownership. I did that for the one that had the meth head in it. I got her out. That was fun. And then one that was abandoned, I got possession of it. So another thing with mobile home parks is unless they're on a permanent foundation, they're a vehicle. So you have a vehicle title. You have to go to the DMV to get it. Well, I had to wait 8 months to get that one that was abandoned because the owner didn't have the title. So I put money in that, and then I did an owner finance option for somebody that had never owned anything in their life. And so gave them the opportunity to own something. They still have to pay lot rent when they're done paying off the trailer. But it was a good option. I spent too much money on the rehab. Again, mistake number 2, at least 2, probably of 15 of them. But it was a good learning experience. So that's been an interesting journey.
Well, kind of continuing on that topic of real estate mistakes, but not here to bash you or anything like that. But I think that this is very valuable information. Yeah. So 2 of 15. What are some of your other key takeaways from your real estate investing career so far? That advice that you would give to other people, things to look out for before they make that mistake. Now, don't get me wrong. Before you answer that, making the mistake is the best way to learn.
100%. Agree.
People can talk until they're blue in the face. They can, you can read as many books as you want, listen to as many podcasts, but it doesn't sink in until it really hits your wallet. Until then, it's a concept. It's a theory. I've been told not to do this, but you do that once, you'll look at everything through a different lens from there on out.
100%. Yeah, couldn't agree more. Failing or making a mistake is a great way to learn. And all you got to do is pick yourself up, dust yourself off, and go forth and do great things and try not to make the same mistake twice. It does happen occasionally. But I would say the biggest thing with real estate and just getting into it and getting started and some of the things that I've learned is why. You have to know your why. For me, it was time. It was time with my family. I'm not out to be a millionaire. There are people that want to be a millionaire. That's great. I have zero problem with that ambition. I think if you do real estate the right way, that will happen as a byproduct. So I don't really feel the need to pursue that. But knowing your why is super important. and then coming up with a plan on how to get where you want to be. And there's a lot of avenues in real estate. So finding an avenue that you like is very important. And I'm kind of in the throes of that right now because I have enough knowledge to go multiple different ways in real estate currently. I have an Airbnb as well. That's been really interesting. I really like it, but it's local. It's not out of state. So it's my wife manages that one. Again, I'm free of the management. My wife just tells me when there's something I need to go fix. But I would say finding the avenue that you think is really interesting, whether that be multifamily, mobile home parks, syndicating, or limited partnerships, single families, midterm, short terms, all of those. Just finding kind of what niche kind of makes sense to you and then staying focused. It's one of my biggest problems. I see, like, what do they call that? Shiny object syndrome.
Oh, yeah. Squirrel moments.
Squirrel moments. Yeah, perfect. It's like that movie Up when the dog sees a squirrel. My kids love that movie. But trying to stay focused and being intentional with what you're doing and the goal that you're trying to get to. So if your goal is to have, let's say, $5,000 a month passive income, well, how many single families do you have to buy to get to $5,000 passive income? Or
work your way back.
Yeah. Start
with your goal and work backwards from there.
Exactly. That's
the way startups start as well. It's like, hey, I got this product. I have this service. I want to sell this company in 5 years for $10 million, $20 million, whatever that is. Start with your time frame, start with your goal, and then work your way back and see how you need to get there. Will one property a year get you there? Do you need two? If you need more doors, should you look at a triplex or quadplex so that it's not as difficult, to manage? Yeah, I think that's great advice to definitely know your goal first.
Yeah, and there was a squirrel moment. Definitely figuring that stuff out to begin with is helpful. But if you're struggling with figuring that out, just start learning is my biggest advice. Join real estate Facebook groups. When somebody throws out a term or something that you're not familiar with, look it up. Don't be afraid to ask questions. Just ask questions. I have asked so many questions that I was like, I know this is a dumb question, but I have to ask it. I just ask it. Either it makes me a lot of friends or it makes me no friends. But when I ask those questions.
How much are you using ChatGPT or AI to model some of these things now versus asking people about it?
So I really love the personal interaction. So if I think it's a really, really dumb question and I'm like, I really don't want to ask that, I may ask ChatGPT and get some general knowledge and then go in there with a little bit of general knowledge and maybe get to something specific. I actually don't use it as much as I should. I'm not a big computer guy personally, so that's a limiting factor that I know that I have. But ChatGPT is phenomenal. It is really, really awesome. I encourage people to use that.
I use one now called Perplexity.
I've heard of that one.
AI. 10 times better, in my opinion, than ChatGPT. They have a free version, or you can pay $200 for the whole year, and that's what I do. I mean, you can upload contracts to this thing and say, I'm the buyer on this. What's missing? Where am I exposed? What should I ask for? And I mean, is
that the one that's supposed to replace almost like lawyers, or like I've heard my brother talking about that or something. Like,
except for litigation, it's almost replaced my lawyers.
That's amazing.
Can't litigate for me.
I might have to look into that. That would be super advantageous. But I'm using ChatGPT right now to help me build a slide deck, like a 20, 30 slide PowerPoint for speaking at a real estate conference. So I'm using that to help me do that. And then I'm just going to change the data for my data and then build the slideshow off of that. I just the other night just got on and said, hey, I want to talk on this. What would be some interesting topic or bullet points? And it spit some stuff. And I was like, wow, that was really good.
And like with AI these days, I can upload a P&L. I can upload pro forma and ask it, to tell me what the health of this is. How is this likely? And it will say, well, an increase from this to this is, this percentage, which is much higher than industry average. So I would be skeptical about this. It's really genius what it's able to do. And I can even use it to build pro formas. I'm say, here's what the total rents are going to be, factor in for vacancy, factor in, lawn service. And here's the thing. AI is as good as the inputs that you give it, the direction that you give. What I've learned that is so good is give it all the information that you can. And before you have it execute, tell it to review the information and then let me know what questions you have. And it'll give me a list of 5 or 6 questions. And I go back.
Wow, that's genius.
Good.
I'd have never thought of that.
I answer all of those questions. They take all of that into consideration and they spit out the answer.
What'd you say that is? I'm writing that down. I'm literally writing that.
Perplexity.
I'm right.
Perplexity.ai. I think the person who introduced me to that, I mean, at least 3 or 4 times. It's brilliant.
I'm going to have to, I see that using that for mobile home parks would be super advantageous, or multifamily, where you have a lot of market analysis already there that you could access. Mm-hmm. That would be super awesome. And then, yeah, I could see that.
Scans everything on the internet in real time.
Yeah.
It actually wrote all my questions today in your introduction to this podcast episode.
That's great. That's pretty awesome. I mean, that's fantastic. Use the tools at your disposal. That's great.
Oh, for sure. I mean, I'm able to do 10 times the amount of work whenever I use AI. There's a lot of things that it can't do, but, for the most part, it does. It helps me with social media planning. Obviously, I go back and tailor everything just to make sure it's in my voice. But, I'll write somebody sends me an email and I'm going to fire off something ugly or nasty back to them. So I write what I really want to. Then I copy and I paste it in there and I say, rewrite this in a much nicer way. And then I take what it says, I put it over there. I'm like, okay,
brilliant.
Gets my point across. But the underlying fact is, I just got to say exactly what I want.
So I've used that in my handyman company to actually write estimates. So I'm not the fastest typer in the world, and I actually get a little bit frustrated. I'd rather sit there with a cup of coffee and talk about the estimate or the bid that I want to give, meeting the customer's criteria. So I don't know, AI may have this function. You may laugh at me. Here goes my stupid question. You tell me if this has it or not. But what I do is I will actually use speech dictate on Microsoft Word and let it spit it all out. And then I'll kind of break it up a little bit, and then I'll copy and paste it and say, hey, just clean this up. And it works really well.
I've done the same thing. If I needed to transcribe something, like I had this idea. I didn't realize how much we talked during these podcasts. But when I was in Boone over the holidays, I said, you know what? I'm going to transcribe these podcasts and just go through, kind of clean it up, and then make it a blog post, just creating more content, everything linking back to each other. So I took the note app on my phone and I pushed the voice dictation. Then I just started playing the podcast and put it right next to the speaker, and it was typing everything down.
Wow, nice.
I came back later and it was just pages and pages long. I'm like, okay, never mind. This good idea, but in theory, but no, this isn't going to work. So,
that's great.
But then I could take that transcript and then I could put it into AI and say, summarize this into a blog post for me.
That's a brilliant idea. And could totally do that. There's a couple of guys I know that are using AI. I went to PodFest early this year, I think. And there was somebody in there talking about using AI for doing the scripts, sending the emails out for podcasts, doing the show notes, and uploading everything to the platform for it to be edited, all using AI. And I'm like, that's pretty amazing to do that. They said it takes a little bit of time to dial it, but once you get it, it just produces itself. I was like, that's amazing.
After recording this, my husband's going to send this off to a guy that we use on Fiverr, who creates the show notes and edits all of this down, uploads it to Libsyn, for the syndication, does everything but the social part for us. I think it's like $130 an episode.
That's worth it.
AI will be there pretty soon, and we'll probably subscribe to something like that. But until then, we're working with a human for $130 an episode. So definitely pays. I mean, just like you said, use your time wisely. Just like you don't want to manage your properties, so you hire a property management company. If you're going to do a podcast, if you're going to the unsexy work that's in your business, there is something out there that can do it. You don't always have to hire a personnel, because then you have to manage people. Then they're going to disappoint you. Then there's training and learning new things. And in real estate, there's something new every day. So when I had employees, I found that I had to stop and train on everything. But we might not ever do that again, what they need to do. So then you get into this rut of, well, I should have just done this myself.
Yeah.
And no, that's not the point when you have employees.
Yeah, it's like that 80-20 rule.
20% of your work gives you 80% of your results?
Yes. Yeah.
Is it that one?
Yeah. So the way that I heard it, something similar, but let's say that 8 hours or 10 hours of the day is That's your work day. So that's when you get stuff done. But out of that 10 hours, 2 hours worth are the stuff that you are actually good at and really, really enjoy. Mm-hmm. The other 8 hours or 80% is stuff that still needs to happen for your day to be productive, but it's more monotonous for you to do. So you either delegate that to somebody else or hire it out. And because usually those people, they're going to be able to do it faster and more efficient. The hardest part most people have with that is actually letting go of the control of that.
Yeah. Yeah. I mean, there's just so many tools, so many uses for AI. I mean, for an example, I got an LOI in yesterday for a 7-unit building that I have listed for sale. And there were just 3 small little things that we needed to change to the LOI. So I literally copied and pasted what was there, put it into Perplexity, and I said, change these 3 things. Make the sale price this, add a note that says that we can continue to market the property while it's under LOI, and if we don't have a contract, agreed upon contract within 14 days of acceptance, then this is null and void. And, one other thing, and it spit out the identical LOI with those 3 changes. So I just have to copy and paste it into a document, send it off for signatures, because what they sent to me wasn't in an editable version. Mm-hmm. So I either have to go in and do an addendum that looks sloppy or mark it up and have everybody initial it, which is always questionable. Oh, yeah. So it's just able to pop something out for you really fast, and you don't even have to think about it. I read over it every time. I'm like, better than I could have done.
Yeah, well, I mean, I could see going in and looking at a big, like an apartment complex or something like that, and uploading to the whole document to Perplexity and say, hey, what are some red flags in here that I should be looking at? Because, I mean, some of those things are super, super long. It's like, yes, you need to read them, but if you can have some highlights right off the top and just some things to specifically look for, I could see that being super advantageous as well.
Insurance policy. Upload your insurance policy. Say, create a 1-pager of all of the highlights of this. What is my coverage? Where am I lacking? Where am I exposed? What should I ask for? I mean, I'll create a little 1-pager for you.
That's another great idea.
Mind blowing.
Or just uploading a bunch of documents and having it consolidate everything. Yeah.
You can upload up to 25 meg files at a time, which is massive.
Yeah.
I've actually uploaded flyers for my husband's company. I'm like, hey, analyze the attached flyer and tell me what we're missing. It's like, you could use more white space, maybe add customer reviews. Your services aren't prominent enough. I'm like, is there somebody back there actually looking at this stuff? Like, I don't know how a computer can tell me what's wrong with a flyer, like an image.
It's got to be off of it's looking at the other success ratios of other flyers and what they're producing as opposed to yours just image wise. But I mean, that's incredible. Yeah. Whoever produced that, or I know it's been thought of for a really long time, but that's pretty amazing.
I'd like to do an episode on how to, all the ways that you can use just regular AI tools available to us today in real estate. Because I think a lot of people hear AI and they're like, oh yeah, that's the future, and I want to invest in that. But it's not necessarily accessible to them or achievable. They're thinking about these big AI models like quantum computing and big data and how it's using it to find all of this stuff and break it down. But literally, we can use it in so many day-to-day applications in real estate. Use it to write a lease, use it to write an addendum to a lease, use it to write your 7-day letter, use it to write an eviction notices. It will literally search the computer for your state laws and cite them in there with the KRS numbers and everything. I'm like, oh my God, perfect.
Yeah, that's awesome. That when you can put that, I don't use it enough. It sounds like you use it a lot more than I do, and probably much more savvy with that. But
multiple times a day.
I mean, that's pretty awesome.
I feel like I'm going to pretend like I have a secretary, just or an assistant, just create an email address for them and then just have reply to that. So kind of like Donald Trump back in the 80s used to call reporters and pretend like he was his press secretary or somebody. It was actually just him.
I actually didn't know that. That's funny. That's pretty funny.
Nobody knows you better than you know yourself.
True enough. Yeah.
Well, let's talk about quickly the future of real estate before we wrap up. So I like to ask everybody, who's in the know, who's out there doing the dirty work, investing, analyzing. Obviously, in residential real estate, we have some big changes coming up later this month from the Department of Justice and the class action case that was won there that's, probably going to put more of the onus back on the buyer to pay for their the services of their buyer's agent, trying to cut into some of the commissions on either side. Obviously, I have opinions on that, and from being in the business, we see a lot more than people on the outside who just look at, dollars and cents and don't transact business very often. That's just a few of the changes that are coming. Obviously, that doesn't touch commercial, that doesn't touch international. And that's, where a lot of my business is and growing more towards that. But from an investor standpoint, what are you seeing? What are you excited about? What are you leaving behind as real estate starts to get more creative? Because, I just had somebody on yesterday talking about fractional ownership. And obviously that's been kind of in vacation properties for a while. And especially with some of these new products coming up, you can buy shares in properties that are professionally managed and you receive quarterly dividends. Now they're starting to do fractional ownership for owner-occupied people. So instead of going to the bank to get a loan, you go to one of these funds. They let you write a cash offer. You come with 2% down. You own 2% of the property. And with every payment that you make, you're buying more bricks. So you're essentially buying your house brick by brick, which is fascinating. Things like that. What are you excited about or seeing in real estate that may be new trends that are coming, maybe where the market is shifting and you're starting to see more revenue being generated from certain asset types, ththings like that?
Gotcha. Well, no crystal ball. Nobody's invented one of those yet. That's accurate anyway.
AI is as close as we can get.
Yeah, it pretty much is. But I don't know, just kind of watching, let's be honest, politics really affects like real estate and all kinds of other stuff and like just all kinds of jazz. But
mindset around real estate too.
Very much.
A lot of it's perception.
Oh yeah. What was it Warren Buffett did? He doesn't he own more bonds than the Treasury right now?
I wouldn't be surprised. He's selling most of his Apple stock, so that should tell you something.
Yeah.
And he can't find anything out there worth buying. They're sitting on a stockpile of like $200 billion in cash.
Yeah. It's pretty crazy, but I'm kind of more small time. I don't watch like the overarching market, but if I like to listen or want to like get an update on that, there's another guy that I listen to, Marco Santarelli from Norada Real Estate. He does really good market analysis. Really nice guy.
Check him out.
As far as like what I'm super excited about, really, interest rates either going up or down. It doesn't really faze me as an investor. Yes, it makes things
shocked if they go up.
I would be too. At this point, I'm like, it's going to come down. So actually, I'm looking at trying to get into a triple net property here fairly soon, which I've never done one before. So this is actually for my family company. I don't know if it will happen or not because this building particularly has had no interest whatsoever. And then all of a sudden I show interest in it and somebody goes to look at it and they're expecting an offer. And I'm like, I don't know if that's actually true or not, but
hey, that happens. My motto is real estate waits for no one.
Yeah.
I took a client to see an old school building that had been on the market for over a year. And literally the day that we're going, they just received an LOI. So like we had to act quickly.
Yeah.
I'm like, what are the odds?
Yeah. So as like, I'm excited about the fact that they're probably going to cut it. And even if they don't cut the interest rates any, which I don't see how they can avoid it, to be honest. But if they cut interest rates, it's not stopping me from buying now. Because if I buy it now and I buy it the correct way now, well, I'm already locked in. So either I can stay with what I got or more likely just refinance into a lower rate and go ahead and lower my monthly payment on whatever that property is. So this triple net lease property, I would love to get into that either before or right after the rates drop and then get that in. And of course, that'll be a commercial property. So it'll be a 5-year ARM in all likelihood.
And those are good too.
Yeah. I mean,
I don't think enough people, like adjustable rate mortgages. They like this, this fixed scenario for 20, 30 years. And I'm thinking, why? Especially when interest rates are high. I want a 1-1 ARM when interest rates are high, because if they're expected to come down, that means you're going to get an annual adjustment. Obviously, there's a cap on how far up or down it can go, but then you don't have to refinance because it just starts to slowly go down. You go in at 6.5, you might be at 5.5 2 years later without having the pain and the expense of refinance.
Yeah, I think too many people they really avoid those types of mortgages. And to me, I'm like, they're a tool. You got to know how to use them and when to use them, but they're definitely there and people should use them more. I have several ARMs out right now, and one of them is on a duplex, which should fall underneath residential. But because of the way that when I bought it, how I bought it, and so on and so forth, that was the best option at the time, which I'm totally fine leaving it there. It doesn't bother me a bit. And I may sell that thing well before the 5-year mark. So I really don't know. And I may run a 1031 exchange on that one. But the market overall, everybody's like, oh, what's the market doing? Well, the market is it's determined by where you're looking. So the market in like Louisville, Kentucky, or Montgomery, Alabama, or Cleveland, Ohio is all going to be a little bit different. It's going to be specific to that area. Like, yes, you have the broad overarching, but the beautiful thing about it all is you can invest anywhere you want to invest. So you can look at these other markets, you can take a look at them and decide whether or not that is where you want to be. And I think if interest rates are coming down, houses are going to start selling. So if you got a house that you want to sell, it could be about the time for that. Or if you got something you want to buy, it could be the time for that here very shortly as well. So I would say I'm super excited about all of that, because regardless, it's not going to stop me from doing real estate.
Yeah, all the good investors, no matter what the market looks like, they're still acquiring. Maybe not the size properties they want
or at the speed,
price points, but just keep going. At least one a year if you can. At least one. Just keep up the pace, keep up the consistency, because you have the appreciation, you have the time value of money. That property is going to appreciate over 2 years, and if you're sitting out of the market for 2 years, then you miss out on that appreciation and that income that's paying off all of your debt. Worst case scenario is if you can't create passive income, just cover your costs, because not only do you have the appreciation and tax benefits of depreciation, but then you also have somebody who's paying off an asset for you where you never have to come a penny out of pocket, and it's slowly paying that thing down to where you sell it. You have that equity in it. Everybody wants the passive income coming in, but I'm still of the mindset, if you can find a good deal, as long as it's covering your costs, you still have an income producing asset. You just don't realize it until you refinance or until you sell, but it's sitting there growing over here on the side, and you're going to realize that one day, and it could just be 5 years.
It's better than a retirement plan in a company that might get sold and you get nothing. I mean, that almost happened to my father-in-law, and that's why I don't have I don't have any retirement. My retirement is my real estate. So that's what I'm going to use it for.
And you look at it very differently when it is your retirement, instead of kind of, some play money over here on the side that you're letting grow.
Well, each of my kids, when they get old enough, I want to give them a paid off house. They're not going to get anything else from me. So they're going to get a paid off house. And by then I will have taught them how to run the business, and it will be their decision on what they do with that property. So my whole goal is to teach them and then provide them the means better than I had it for them to build something. And I'll help them build it if they want me to, but that's one of my ultimate goals.
Sounds like a great plan. Well, William, tell everybody how they can find you, connect with you, social media, your podcast, training courses, anything out there that you want people to know about.
Absolutely. So you can always find me at william.c.parmer on Instagram. I'm not great about Instagram, to be quite honest with you, but it is there, and I do check it occasionally. I will get back to you if you send me a message. If you're interested in coaching, masterpassiveincome.com/coaching. I'm one of 3, so you'll see my face up there or find my name. And those are the best ways to reach out.
Perfect. Thanks for coming on the pod today. We've enjoyed having you.
Awesome. I've had a blast, and it's been fun.
It's been a great conversation. And I'm your host, Jonathan Klunk. Thanks again for joining us. You can find me on Instagram at Top Louisville Realtor. If you are interested in any type of international short-term rental vacation investment, hit me up. We have some exciting developments going on right now. St. Vincent, Playa del Carmen, some coming up in Utah, other exotic international destinations as well. Instagram is the best place to find me. You can also send me an email, I guess, jonathan@gokeysource.com. Appreciate you joining us again today for another exciting episode from the Real Estate Mentor podcast, where we give you actionable tips that you can take and apply today to start growing or improving your real estate portfolio. We'll be back in 2 weeks with another great episode. See you then.